Good morning, guys. Welcome to this Wednesday, April 23rd. And look at this overnight. Go figure, right? So we have the market gapping up at the open. I'm not sure if that was something they said on from the White House in terms of a bunch of trade deals on paper, or if it has to do with Tesla earnings. The markets had a really happy ending, didn't it? They really popped pretty good on the open here, the overnight open. So we started off, we closed out, well, we started off the overnight. We were looking at these levels, the 5300s, and I think because it's gapped up pretty good. If I scroll this thing down, uh, you can see how we gapped. It's pretty freaking good. So we were closing down here, and we were looking at if they could hold this line. The 5300 level, this level right there, the 5300s. If we can hold this level, we would start off a range bound with a bias to the upside, and if not, we're just going to start off range bound. But because they were heading down pretty good here. They were down here at the 5300 in end period. That's your end period print. They were down here below it, and uh, I'm going to correct that. I think we talked about these two areas down here, 5270 and 60. That's what we talked about. And the 5300 above that, but we're going to stay on the long side. That's what we said yesterday. So we were looking at this range right there, and we had a pretty good move down in end period, and then a massive retracement here right up above the 5300 before they close. So that was an interesting dynamic right into the close. I figured it may have to do something with earnings, but they closed above the 5300, so staying on the long side going into the overnight. A little bit more positive. Sometimes you get this sell-off and they take things out right into the close, but no, this one they held up pretty darn good. Now the as they open the gap from the 53 15s all the way up here to 50 where did he open? 5380s. That's what it gapped up to, and then it took off to the upside from there. And looking at F1, you can see they've been right. It's a pretty big gap, and they're still holding at the upper end of it, heading up towards this 5480 level, and almost back up to this 5500 congestion area. Interesting stuff going on there. So it probably has something to do with the press conference they had from the White House in terms of the trade deals. It's what I would expect. The Amazon or Amazon the Meta Tesla earnings. God, can you get that right? The Tesla earnings, I think there was a reasonably positive reaction. I didn't see a big reaction at the end at the before the close. So it was a little bit up late in the pre-market in the post-market, but it's they missed on the numbers, but I guess it wasn't as bad as the people thought. So not too. Uh, we'll see how the Tesla does in the pre-market here. I haven't quite looked it up yet, but I can do that in a bit here. The news this morning, we have a fair amount of news coming out. We had two speakers in the morning. The mortgage applications came out at 7. They were kind of across the board to the downside. Yeah, big negative numbers on the mortgage app, so that kind of dying off again. I guess the rates are with the rates coming back up again. It kind of cools off that refinancing boom. So mortgage apps kind of weak. P at 9:45 get the PMI number. New home sales at 10. 10:30 we get at 10 we get Atlanta Fed business inflation expectations. 10:30 we get an oil report. 5-year auction at 1. Beige book at 2. And then 2 more speakers late in the afternoon. So we got stuff going on today in terms of news, but 9:45, 10. We need to pay attention. 10:30 oil report if you're trading oil. 2 o'clock, so 1 o'clock, we have the 5-year auction. 1 o'clock. So that's what we got in front of us. Definitely a little bit of action there. But I think whatever was popping the market, we'll see if they change the sentiment, can hold on to the sentiment, or if we're going to get the gap closure dynamic going on today. So looking at the gap up, very positive, I think, given that terrible Monday. It's open up on a Monday, and that's absolute to start falling apart. yesterday we had a nice recovery day. Today gapping up to the upside, and yeah, we'll take it. Now on the upside, on the upper end of this range, remember we run into resistance here at that 5500 to 5530 area. That's a pretty good resistance, actually all the way up to the 5560s. But they start taking out some of these ledges right there around the 5500 to 5530s. I think we have a shot at making a go out of it to the upside. So we'll see if today's going to be the day when we see a little bit of strength start developing, but see a little bit of light at the end of the tunnel. But it is pretty freaking volatile still, and if they can't take this higher, the other option we may have in front of us is a gap retracement or a gap closure type dynamic. So we'll see how that shakes out, but it's I would start off on the long side. I would look to buy weakness. At this point, they're trading up here at the they're trading right up here at the 5430s. So if I would be looking at for long opportunities against 5425s, 15s, 5400s, 5390s, 5385s, down to that 5370s or 75s. Below that London low, I would be a little bit less aggressive. And looking at that point, I would start looking for okay, maybe they're going to try to close this gap after all. And if they start taking out that low 5380s, yeah, we have a gap closure in front of us. And I think we may be, at that point, I would lean in on the short side and see if they're going to run it down here and try to close this gap. So not going to be totally leaning into this gap up and think that's going to be the end of the start of a rally. Sometimes you get this pop in the overnight and then you have an absolute disaster as they retrace this all the way back here in the day session. So, but you can start off on the long side and then just be mindful when you head down to that 5400 or 5395, 5390 to 95s. These two support areas at the London low. If they both comes out, I would be starting to think about the short side. Still looking to buy against the 85s and the 75s for rotations back up. And below 75s, it starts taking out the session lows. I think that gap closure trade starts becoming reality. There can always be one probe to the downside. If they run it down here, the probe, and then the probe holds. So you always be mindful about that. It is a market after all, and they'll be trying to fake you out on the downside. So just hopping on when they start heading lower is usually not the great idea. Just wait for them to take it out, retrace, and fail on the reverse retest. That's the more conservative entry. But that also gives you decent trade location and a little bit more certainty, you know. So, and if they start heading higher, I would just stay on the long side. If they don't run down here and test these support areas, just start pushing to the upside, I would just stay on the long side. Just be mindful when you start heading up here, you have a few resistance areas at the 65s here. Come down a little bit, should be a little bit higher. See that ledge? I want to cover that ledge up there. So here you have that nice ledge and that mode on that prior day. So 5465s, the 75s, 85s. As you start running into these resistance areas, when you hit the 5500, that's when you really start running into some resistance here. And you have, this is the upper area. So as you start getting into the 75s, 85s, 95s, up to the 5515s, I would be looking for short setups. Just not super aggressively. As you get closer to that 5500 edge, I think resistance definitely becomes stronger. So, but there's a lot of range, and you can go from 5450 out to the 5500. That's 50 points on the upside. You can do that pretty easily, and that would be nice. If you stayed on that long trade, I would be happy. It would be a pretty good coin made out of that trade. So starting off on the long side, looking to buy weakness at initially 5425s, 15s, 5405s. The last one would be here at the 5395s. Or not the last one, but the last one I would be more aggressive on. And below that London low, I would be looking for more to the short side. Still looking to buy against these 85, 75s. But if they keep going, then just stay on the short side and see how far they can take it on the downside. So that's how we get started. Let's see if this little gap up he gets some legs and shows us some love. If not, and we may stay on a range or even see that gap closure develop. But we know when to change our minds and what to look for. All right, so that's the ES to get started. Looking at the bonds and the NASDAQ. All right, so the bonds way up. It's a big move to the upside and back up to the 14. And look at that in the overnight. So they were up on the bond market here. The overnight gap up as well, and they popped from they closed down here at the 113.16s. You see that was the close. They gapped up, and they have been straight up from there. So the bond market liked whatever they said. That's the way up, and yields coming down based on that. It's amazing how things change. When the yield starts coming down, bond prices go up a little bit. Everything gets easier. The stock starts poop. There's a little bit of risk on kind of dynamic in the air. They definitely a much lighter. It feels much lighter, that's for sure. But bond market right up here at that low volume area at around 115. So that's the next level. If you can take that out, we may see them run up here to the 117.16s. But remember, mindful right up here at the 115s, around 15.15s, low volume area. But actually, it almost looked like they took it out because it's around 15, so they could very well be above that area right now. It's hard to see on that F1, but on the F2 you can see that the low volume area prior to there up here. Looks to me like they're almost above it, so let's see if they can hold on to that. If so, we may see a start of a move up here to the 117s. That would be a pretty good move on the bonds. So starting off on the long side, looking to buy weakness on the bonds against the 115.10s, the 1504s, 1430s, down to that 1424. If they trade below the 1424s, I would take off the long bias and go back range bound, looking at trading around that 1416s. That would be the lower attractor right there. That would be this high volume attractor right below it. So turning it from the long side, but if it backs off too much, I'm thinking that they are going to retrace back to that high volume area and stay there. So that's the bonds. Let's see if they can hold on to their gains. NASDAQ also big move to the downside, straight up. Risk on is what it feels like this morning. Amazing how things changes, right? But this gap up in the overnight, that's still what I know they talked about the trade deals on the from the White House yesterday, and there was a bunch of positive stuff they were talking about. So maybe that's what's gapped it up. And I know Tesla had earnings yesterday, and that was a big number of people are going to look at. And I think if you didn't hear it, that Elon Musk was going to spend more time on Tesla. So he's going to be refocusing on Tesla again and spend a little bit less time on Doge. And maybe that's what the market is liking. I don't know. Anyway, so the gap up again, they closed there at the 360s. That was right at that volume edge we keep talking about. And they gapped up pretty good up to the 600s. They're up here to the 900s. So they're up 300 points on the NASDAQ. And man, that's pretty good. So I would watch it again. We have this area congestion coming up ahead of us. That's 19,100 to the 19,360s. They can get past that one. I think we are starting to see light at the end of the tunnel. We are on our way at that point. So that's a good area of congestion to pay attention to. But at this point, starting off on the long side, gap up is at 600. Now, if I scroll this thing up a bit, and I would be starting off on the long side here, looking to buy weakness at the against the 850s, 800s, 770s, 720s. Below 720s, I would be the same as the ES, a bit less aggressive on the buying, but still looking to buy against 670 and the 630s for rotations back up. And below the 630s, looking for the gap closure trade on the NASDAQ as well. And then so I'm not totally buying this gap up and the continuation just yet. I've seen it too many times, and it looks great in the morning like that, and then as they kick in, you see them actually just knocking the shit out of it, and it's running right back down here. But watch that lower, the London low, that comes out. It's not going to be super aggressive buying anymore. Still looking though for buying opportunities against 670 and the 630s. And if they start taking out the 630s, look for that gap closure trade again. So that's the way I'm looking at it. On the way up on the NASDAQ, not going to be super aggressive on the short side until they get up here towards the 19,000 levels. So 19100 and the 19090, so these two resistance areas. That's your first part of that area. So that's easier to see on the capital flow. So when you get up to this area, the 19140s, you see that's the upper area. So that big ledge, and the lower area is this guy. So this little chunk of TPOs gives you an idea. That's the first hurdle you need to get through. You get through that one, I think they have a good shot at getting up to that three-letter ledge at the 360s. So, but here could be a nice short setup as well. So if they can't take it out, nice short setup for rotations back down out there. But they could keep pushing it, and any one of these could hold until they take out that 319, 360, 370. If that is in the cards today, that would set up a nice little move to the upside. That would be risk on for sure. All right. So that's how we get started on the NASDAQ. Same story as the ES, starting off on the long side, looking for potential gap closure trade. We'll see how it goes. Now, volume-wise, I did restart the platform, so it's a little bit off on my chart. I'm going to rebuild my ES. I get a good read on that. I'm going to do that right now. I'm talking about gold and oil. So looking at those two. Gold, big gap down. So that's kind of melting down, pardon the pun. It's always fun to say about gold. But look at that thing come down. So this is yesterday's trading. They were up. They spiked at 3,500 on yesterday's high overnight. Then we had that crazy retracement, and that was tradable if you were aggressive and had the wherewithal to stick with it. But that was ugly on the way down, and they came all the way down here, this low volume area. They closed a little bit above it at the 3390s, and they gapped all the way down here to the 3360s, and then they had way down there, being way down here to the 3300s. Now trading in this area, the 3330s to 40s, they've been spending a few days here, so that's definitely an area they can stick around. So, but I would watch them to see if they want to retrace this further than 3300s. That's $200 off the high. That's pretty crazy in 2 days on gold. That's pretty darn aggressive. But that tells you how volatile that is. And when you get in, when it starts moving, you don't want to be in the way. That could get you kind of run over. So I have 300,000 on my micro ES right now. That's a little bit higher than normal, but it's not close to the million we had in that crazy volatility time. So still up. It should be around 100,000 or so in normal volatility. So it's a little bit more volatile than normal, but as I said, not totally crazy. So gold, I would start off range bound, stay on the band with a bias to the downside, looking to sell strength. At this point, up to this level, right at the 35, 33, 50, 60s. So here's the 50s, here's the 59s, maybe up to the 70s. But these two resistance areas, if both of them comes out, you see we're taking off a couple of volume edges on that. And we may be right back in this low volume area, retracing this. So looking for short setups against the 3350s. 3360s up to that 3370s. Above 70s, I think they're heading higher at that point. So these three levels, that's about it. And if they can't take it lower, we may just find ourselves building value at this little high volume area again. So watch this London low. They take out that 3312s on the low end. That would be this. Yeah, this little area right there. There's a nice volume. It's a little bit lower, but that stalled the activity. So, but below the 3320s, which is the next level up, so 20s down to the 12s. These two support areas. If they both of them come out and it starts trading below it, I would start thinking about the short side and looking for a retest of that low at that point. So that's gold. Trade up on the short side, or start range bound with a bias to the downside, and look to sell strength up to these up against these upper resistance areas. But if they're going to start retracing this to the upside, they'll take out the 70s, and I think that's your confirmation level if that starts coming out. And then finally, oil. Look at oil falling. Oh, look at that coming apart. They were up here against the retest failure in the overnight against the 6480s. Look at that sell-off. There we go. Oil heading lower. So much for that. So definitely heading lower at a pretty good clip, so stay on the short side on oil. So we had nice retest failure on oil, and so far it looks like they're not going to be able to, they're not taking that any higher. But I've been talking about that in terms of the short side on oil. So I would favor the short side. They were just up here against that upper edge. They were pushing it a little bit to the upside, and now you can see us heading right back down here to the 61s again. So stay on the short side on oil, look at sell strength, and see how far they can take it. So at this point on oil, I would just look at looking for short setups against the 6320s would be aggressive, but against the 6350s, the 80s, up to that 6420s for rotations back down. If they start heading above 20s again, I think they're retracing right back in our face, and then that would be a bad scenario. But at this point, looking to sell strength for rotations back down on oil. Overall, I'm still biased to the downside on oil in the bigger picture. I mean, the prices are going to keep coming down on oil with the policies they're putting in place. So any little move up here, you can look for short setups. That's not super aggressively, because you can have days like this when they're trading at like 3 little distributions to the upside, an overnight, a day session, and another overnight heading higher, and then finally they run out of gas. So there's also opportunity for small rallies up like that. You got to be careful about that. So it's not just stepping in front of it, but when you get into a nice move to the downside, look at that go on the downside. So staying on the short side on oil at this point and see how far it can take it on the downside. All right, so looking to sell strength on oil, not going to be very aggressive buying it until on oil, that is, they can then get down here to the 61s. I would be looking at buying against the 61s if they're going to bounce off that high volume area. And then finally back to the ES again, and we are back to the ES, and we're kind of holding where we left it. Rebuilt this chart. I see the volume correctly. 300,000 contracts on the ES. That's decent, and a decent amount of volume. And we will leave it there for now. So staying on long side on the ES and Nasdaq. Let's see if this gap up is get some legs and can shows us some follow through. If not, then we may see that gap closure develop. It's anyone's guess at this point this morning, but hey, we trade what we see, and we're just going to keep watching for it. So good trading, guys. See you back at 11:30 for the next update. Later.